Hello friends. And welcome to my channel. For those of you who have not been here before, I am a YouTuber that creates content on personal finance, investing, entrepreneurship and more. If you find these fascinating, please feel free to subscribe at the end of this video. In today's video I will be showing you how to do an Iron Condor in Robinhood. So what is the Iron Condor strategy? The Iron Condor is a four-legged options strategy, meaning it consists of four different options, involving two puts, one buy and one sell, and two calls, one buy and one sell. These options should have all the same expiration date. The main objective is to profit from low volatility, meaning that it will earn its maximum profit when the stock price closes between the middle of the strike prices at expiration. When this happens, you also don't need to pay any commissions to get out of your position. When should you use this play? The best time to run this play is when you expect minimal movement in the stock within a certain time frame. How do we set up this play? To set this up, starting from the lowest strike price and moving up to the highest, we need to get these options: buy a put, sell a call, buy a call. Generally, we want the stock price to be in between the strike prices of the sold put and sold call. I will go into further detail in the following clip. So let's go ahead and pick our stock on Robinhood. For this example, I will be using Microsoft. We want to click Trade, then Trade Options. So here we are at the selection screen. We want to use this top bar to scroll to select a date. Personally, I like running this play 30 to 45 days from expiration to take advantage of the accelerating time decay as expiration approaches. This date also depends on the underlying stock and the market conditions such as implied volatility. But for this example I will just pick November 20th since it is 30 days away from the date of recording this video. So let's go ahead and scroll all the way to the current share price. Microsoft's current share price is around $215. We now try to predict the gap at which Microsoft's share price will stay in between. This is how we create the strike prices for the Iron Condor. Let's create a $10 difference for the share price and the two corresponding strike prices. To break it down, I will pretend to have a strong belief that it will not go above $225 and go below $205. These will now be used for the option of selling a call and the option of selling a put, respectively. We also want to consider that these strike prices are one standard deviation or more from the stock price at initiation. This will increase the probability of success but in return also lower the potential profit. Basically, the bigger the gap that these strike prices have, the less promise we have in making any gains. We will now use the strike price of $205 to determine if it is a standard deviation of 1. Make sure we are in the correct toggles. $205 is a sell and a put. Let's go ahead and click it open. We now want to click the limit price section to bring up the Greeks and extra information. In statistics, one standard deviation from the mean is approximately 34.1%. We want to look at implied volatility and see if it is above this percentage. If so, we are good to go and have a high percentage of being successful. We may also do the same for our 225 strike option, but generally it will be the same. Now that we have done that, we must click this select button on the top right corner. It will create these bubbles on the left for each option. These bubbles will allow us to select multiple options. Let us start from the lowest strike price. This involves buying a put. Make sure that we have our toggles in the correct positions. Set them to buy and to put. Since we already know the value of our short put, which is $205, we will now scroll down to that value. For our long put, I like selecting the one that is directly below it, which is $202.5. It doesn't really matter how far apart the calls and the puts are from each other. Moving on, move the toggles to selling a put. Now we can go ahead and select that $205 put. Third on the list is selling a call. We determined that value at $225. Let's search for it and select it. Finally on the list we have the buying of a call, same rules as the puts. Except this time we want the option that is above. Make sure the toggles are right again. Then select that value, which is $227.5. On the bottom of our screen we should now see that we have 4 options selected. We can tap Continue and it will bring the menu up. If you did everything correctly, the title should say Iron Condor. Congratulations! You have just created an Iron Condor. Now we wait till the expiration date and hopefully get profit. That concludes this tutorial on Iron Condor. I wish you the best and good luck on trading. Thank you for watching my video and I hope I helped you gain some new information. Please check out the rest of the option strategies in the description below. Also feel free to check out my stock portfolio, which will also be in the description. And if you enjoyed this video, please give it a thumbs up. If not, please provide me with any questions or concerns in the comments section. Please feel free to also subscribe to be updated with any new videos. Till then, catch you guys in the next video, and I hope you have an amazing day.